Welcome to the Techno Fundamental Report for March the 19th. You know, being able to sleep at night when you're involved in the stock market is really important. You need your rest. So, how do you stay mentally strong during volatile markets? Well, it's all very psychological, but at the same time, there are certain tools we're going to talk about today to help you with those issues. Just don't take stock tips. The problem with stock tips is that when you get a tip from somebody, they may not tell you if the tip is working out or not working out. So, give an example. I've been going on a radio show for the last 25 years. And I've reached the conclusion that the only reason they want me on this radio show is to give stock tips. So recently, I was on the show and I mentioned that Eli Lilly was a very profitable company. And it is. Its return on equity is outstanding. Very profitable company. But the stock price is something else. And so, on the last time I was on this radio show, the person came on saying, "Hey, I bought Eli Lilly and it's not working." Look, giving stock tips is something I really have to work on not doing. I've got to stop doing it. So, Jesse Livermore talked extensively about this in his book. Trueflation. Well, the current report on inflation is 2.4%. Actually, this morning's numbers were a little bit higher than that, which was the producer price index. But Trueflation is saying 1.5%. So, you can see here it's really come down, starting to work its way back up, but I'm just keeping an eye on it. The market has a way of throwing a head fake at you, is ways to deceive you. Markets are designed to fool most of the people most of the time. So a head fake is something we have to deal with all the time because our indicators will tell us X, which may be premature. We're just not sure. So when you look at these indicators, you have to realize this is like snake eyes. When I was in business school, one of my favorite courses was statistics. And we studied how many times it would take if you throw the dice to get snake eyes. Well, it worked out, the formula works out to where it's about 1 out of 36 times. So when you look at these indicators, you go, okay, are they going to not work this time? But it's just a way of just sticking with something that works most of the time. So take, for example, the follow-through strategy. Basically, no major bull market is started without a follow-through day. So it really has, as far as determining bull markets, it's like 100%, correct rate. But anyway, the key points are a follow-through day confirms the beginning of a new uptrend after the market hits bottom. It occurs on day 4 or later of an attempted rally. To identify a follow-through day, major indexes for a higher close on day 1 of a rally attempt, followed by 2 days where the index does not fall below the low of day 1. On day 4 or later, a significant gain in price and volume confirms the follow-through day. Not all follow-through days lead to a bull market, but historically, no bull market has started without one. So let's look at some historical examples. Here's the NASDAQ. We're talking 2023. So you can see here the market, broke below the 200-day moving average, formed a low, and then we got the follow-through day, which led to a very nice rally. That was 2023. So let's go to 2025. You get the low, you get the rally. Now, what is critical here is you've got to have a day where things really pop, and the volume has to be higher than the prior day. So here is a follow-through day. Here we are, 2020, same scenario. We come down, we make a low, so we go 1, 2, 3, 4, 5, 6, 7, 8, 9. On the 10th day, we get a follow-through day where volume is higher than the prior day. So I wanted to also talk a little bit about commodities because everyone is very interested in commodities right now. Well, one thing I know about commodities it's a hit or miss thing. Usually what I have found is that you want to invest in commodities when everybody hates the commodity. You don't want to wait till the commodity gets hot because it just tends to be where you have a one-time event where supply-demand gets out of whack, but then everything starts to normalize. Whereas with growth stocks, the difference is you've got a catalyst, which is growing earnings. So like here we have a graph showing, well, actually growing revenues. So if you look back on oil prices, so everyone's very interested in oil prices right now. You can see why, because we've gotten this big gap up in the price of oil. Now, if you go back historically, you can see you get these spikes, then goes nowhere. Then you get these spikes, and it goes nowhere. So with commodities, it's a completely different strategy. It's not like growth stocks where you have the catalyst of the growing earnings, whereas the commodities, it's kind of a trading strategy. It's kind of a good luck type of thing. Now here's gold. You can see here with gold, for the last 20 years, gold hadn't done anything. So the key would have been that you should be buying gold when everybody hates it. Then boom, it takes off. Now everybody loves it. So we'll just have to see what happens with gold. Now here's silver, same scenario. Did nothing for 20 years. Then we get a supply-demand imbalance. Now is this going to be a long-term trend? We'll have to see. But with commodities, it's tricky because you're not getting that catalyst of consistent growing earnings like you would with the growth stock. Now, in the overall market, let's just look at the market. You can see here that the NASDAQ and the S&P are starting to challenge that 200-day moving average. So far, it is holding. But the primary trend is still up, but we would like to see this continuing to hold that 200-day moving average. Now, on we were just talking about the follow-through day. So let's look at our situation now. So we made our low last Friday. We've got an attempted rally. Now, if we break below that low right there, all bets are off. So you can see we're trying to get going. Now, if we can get into days 4 and 5, 6, 7, 8, 9, 10, where we get into an uptrend, then this would become a follow-through day. Now, we've got to watch volume as well. So that's the NASDAQ. S&P is the other index that we will follow. You can see here we made the low, which we have what we call an attempted rally, but so far as of today, not really doing anything. So if you have any questions, please let me know. Continue to stay cautious. Thank you very much.